All right, welcome back, traders. John Caruso here, August 17th. Quick look in on the market. We just saw the release of the July retail sales numbers, 0.0%. The market was expecting up 0.1%. The prior reading was up 0.8%. So we are starting to see a slowdown in retail. We also heard from retail giant this morning. Target reported quarterly profits falling nearly 90% from a year ago's levels. The retail giant reported 39 cents per share versus a Wall Street estimate of 72 cents per share. So we are starting to see some signs that the consumer is slowing out there. Also, taking a look at overseas, the United Kingdom reported very hot CPI in the overnight, 10.1 versus a prior reading of 9.5. So inflation remains a problem globally. Obviously, we're in the beginning stages of perhaps seeing United States inflation begin to abate. And I think a lot of that is attributed to the U.S. Federal Reserve being the most hawkish central bank around the world right now. So perhaps we're going to see a little bit of a handoff from the Feds being demonstrably hawkish to perhaps the ECB being a little bit more hawkish going forward. And of course, they're doing this head on into massive economic headwinds. Growth is slowing globally around the world. It's going to be a very interesting fall, we think. Obviously, we've enjoyed a very nice rally here through July and August, but we think things change dramatically come September and October, so keep that in mind. The S&P, we're starting to see some weakness, 42.73. Don't quite have it immediate term oversold right now, but it wouldn't shock me to see us reattack that 200-day moving average that was rejected yesterday. That's up around 43.26 on the S&P 500. Whether or not we can get a bit above that, I don't know. That remains to be seen. But clearly a massive rejection of the S&P 500 yesterday after testing that 200 bar. Taking a look at oil. Oil prices are still weak. We're down about 40 basis points here this morning. Oil remains bearish trend. The only thing that would bring us off this bearish call in oil is if we were to see prices recapture 101.88 on the upside. So write that number down. 101.88 is where we recommend to our bears to take a more neutral or sidelined approach in oil. Gold prices, we still like gold. Gold's immediate term oversold here this morning. We're trading down along 1782 following the retail sales numbers. That could be a place that we look at here today for a trade back on the long side. That's something we're going to consider inside of our little chat room over here. Treasury yields back at 290 right now on the 10-year yield. I do think we're going to see a lot of resistance for 10-year yields to get back above that 3% level in the very near term. So keep that in mind. Later on today, we get the FOMC minutes, so we're going to hear some more clues about what the central bank is thinking in terms of monetary policy going forward. That's all I have for you here today. Best of luck to you out there. We'll catch you back here in the morning. Take care.